Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning. Ira Epstein of Lynn & Associates for this Tuesday, the 2nd of May, 2017, about 9:20 a.m. Central Daylight Time. Well, we've got a day so far where we're somewhat in the red for the stock indices. You know, the poster child, as I call it, and it's facetious, of course, the NASDAQ. Well, it's going to see earnings later from Apple, Facebook, and, you know, everything in tech has just been really good for those markets. The gold market tried a bit of a lower price today, has come back, and the silver's holding up a little bit. Copper saw a bit of a slowdown in China, giving back some of the gain that it had off the Grosberg situation, where the miners there are still talking strike, and we'll find out where that's going to go. I think you got to be on your toes today and really watching at 3:30 in the afternoon the API report. If we see other builds in the gasoline market especially, that could be a problem for the market. We've seen draws in the crude, but without the distillates and the gasoline getting that, be careful. Also, nat gas, I think the market's trying to base here, and, you know, eventually the warm weather will return and those air conditioners get turned on, so that's an interesting area. As you take a look at the grain markets, giving back a little bit in the corn and the meal today, beans up a fraction on the day. And again, we're still dealing with the storms. They have not left the Midwest. We're in Chicago here. It's still raining, and it's been raining for 3 days solid. Rivers are swollen. Flooding is taking place. So it's not only Chicago. We don't grow a lot of grain in Chicago, but around us, absolutely. You get in a car, you drive an hour, and you got cornfields all over the place. So be careful, because that's one of the things. A spread that a lot of people are talking about that you should be looking at, Kansas City wheat versus Chicago. It is an exchange-traded spread. Not recommending it. I'm saying it bears you're looking at because it's the KC wheat that got damaged, not the Chicago grain type of wheat, and that's different. You know, you got soft and hard qualities there. All right, in the U.S. Federal Reserve, the meeting kicks off today. It finishes tomorrow. We get a statement at 1 p.m. Central Daylight Time. No press conference. June's the press conference. The ISM Institute came out with the current index at 55.8 versus 56.5. Still holding in pretty good. I was surprised at this. The president suggested that the U.S. needs a good shutdown, and that's a bit of a problem in September. So they're giving that 6 months of money, but it appears that he's getting ready for a battle back there. Market Group's German PMI came out to 58.2, slipping a tenth, doesn't mean anything, from the March figure of 58.3. Now, as I understand it, it's Market Group survey. The news headline said a private group. It's typically Market Group survey of the Chinese factory sector purchasing PMI fell to 50.3 from 51.2 and below expectations of dropping only to 51. Then they also suggested that the economic pace has slowed more than they wanted to see, and that's probably what's hurting the copper market today, bringing it back down to a little reality. The problem is you still have all that copper you may not get onto the market, and that might offset one part or the other. So you got your hands full with a lot of information today that you should be watching. Let's talk about how sometimes you look at these markets, especially at times like this. One way are different types of option spreads. It's an interesting way to look at the market. It's a way to slow down the market, take some volatility out of it, and if you really want to limit risk, well, you can absolutely limit it. Let's face it, if you bought a put or a call, your loss is limited to what you paid for them and no more than that. But there's other ways to do this. There's synthetics, there's long futures that you create, and so on. The CME Group has put together a booklet called 25 Proven Option Strategies. And they are proven. They'll show you how they work, how you use time decay, gamma, deltas, and so on. All these Greek names, they sound complicated, and believe me, option trading can be complicated, but it also can get very easy to understand once you read booklets like this and you get the basics. Call us. You can go to our website. You'll see a carousel of free offers. Choose any of those that you want. Under us right through here, you'll see it'll say click here for Ira's free offers if you're watching us on a website that's framed this video, or you can always click right up here if you want, and up there you'll see an icon for the YouTube videos. Just click on that icon, the form will appear. I'm Ira Epstein. You have a great trading day, and I'll see you this afternoon.